The key speaker at the Bendigo Farm Business Update spoke about economic factors impacting on farmers. And with me now is the very man, economist Stephen Koukoulas. Stephen, what was the key thing that you had to say to the farmers gathered here today?
Look, the key thoughts were firstly that the overall economy is doing pretty well. We've got solid growth occurring and it'll probably continue for the next year or so. But within that we've got this two-speed economy. Some sectors booming, going very, very well. Other parts of the economy that are in the slow lane performing quite poorly, and that's the policy challenge and the management challenge, I guess, for the economy over the next year.
That's been going on for a bit. What changes do you see coming?
For farmers, what would happen, I think, in an era where we do get a fall in mineral prices, is that the Aussie dollar would fall. There's a nice correlation between the level of the Australian dollar and what happens to the commodity prices more generally. Obviously, over the last little while, with the Aussie dollar at parity, the driver of that has been these high prices that we're getting for coal and iron ore and natural gas, these sorts of things. If they come off, then I think the Aussie dollar is going to be coming off with it. And of course, the other thing that's important for Australia is, of course, interest rates. Our interest rates, even though they're relatively low, they're still higher than most other parts of the world. Money's flowing in here, and if I'm right and we see the RBA cutting interest rates a few more times, then we'll see this Aussie dollar pull back. Yeah, maybe we do see 90 cents rather than 110 for the Aussie.
So when that mineral boom goes off the boil and the dollar drops, presumably that's actually going to drive interest rates up.
Oh, that's the critical thing, because you're spot on that if we do get the Aussie back at 90 cents, say during 2013, then of course that puts upward pressure on imported prices. You know, one reason at the moment why we've had nice low inflation has been the Aussie dollar has lowered the price of capital equipment, consumer goods. So we've seen this inflation rate come down partly because the Aussie dollar's been so strong. Imported prices are falling. So if we do get the Aussie falling, you get inflation back up, and then of course the RBA hikes. But I think that's a question more for the middle of 2013 rather than before then.
Interestingly, for agriculture, you had something to say about what replaces the mineral boom when it eventually comes off the boil.
This is the Asian century, what's going on, and they're going to be demanding goods and services from Australia. So we've got the mining sector worked out. We're supplying them tons of coal and iron ore and energy. The critical issue is now is to build up this agricultural sector so that we're producing a lot of the food that they want to buy. And I think that's where the future is going to be. And if we can do it well, if the farmers can come on board, if the government can get its act together with the infrastructure spend and get the network right, I'm optimistic over the longer run.
On another optimistic note, you don't see a recession on the way.
Look, I don't see a recession in Australia. We've been lucky that it's been 21 years now since we had a recession back in the early 90s. We're still growing. The economy's still growing about 3.5%. And if we do get some negative inflow from the world economy still looks quite sick to me. But if that does happen, we'll get the Reserve Bank cutting rates more. They've got plenty of scope to do so. So we've got an official rate of 3.5. So in a worst case, we could have the RBA cutting 100, 200 basis points, so really aggressively. That's good, that'll help. The other thing is that as this dollar comes down, if we get a worst case scenario, my 90 cent forecast for the Aussie for next year will be too optimistic, it'll fall even more. Just think back to the GFC, we got down into the 60s for a short period only, but if the world changed its assessment of commodity prices, the Aussie dollar falls, and that's a safety valve, if you like, for the Australian economy. And on the budget, despite all of our discussion about government debt and these sort of things, we're actually really well placed. So, when we get the election out of the way next year, if we have a hard landing globally and that impacts on Australia, frankly, we've got the scope for the government of the day, whoever it is, to spend up a little bit, to give us some tax relief, to keep this growth continuing. So I'm optimistic we won't see a recession, barring some almighty disaster globally.
Stephen Koukoulas, thanks for joining us on Ground Cover TV. Really